Hi everyone and welcome to another live trading series. It is 12:30 on Friday, November 11th, and I have a few trades and maybe a few updates from last week that I want to show you. I'm trying to get more active with my trading in case you're interested. Yesterday, if you weren't paying attention, was one of the craziest days on the S&P 500 that I've ever had or that I've ever seen. Just looking at the heat map right now. Okay, so I took the snippet from yesterday. Everything is in the green except McDonald's. The CPI numbers came in the US inflation came in slightly lower than expected. This doesn't mean good. This just means less bad, which is insane. So instead of like 8.7%, it was 7.7% year over year in October, which is still bad. So I don't know why everyone started freaking out. This doesn't seem like a rally that'll last, but because everything went up so much, I am now in trouble on some options that I want to show you. So if we look at Netflix, I wanted to close this out a few days ago. I was like 80% profitable on this. And then Netflix went up $17 yesterday. Netflix went up, from what, $255 and it ended up at $275, so $20 in a day. And now it's breached my short strike. So this expires today. And now I'm losing $2,700 on it, which is just fantastic. So what I'm going to do, there's enough premium that I can roll it out 7 days without selling more contracts and still make some money. So I'm going to do that in front of you. So the reason, if you're new to trading, just an update on what this means. I sold 7 calls on Netflix. It expires today, November 11th at the 280 strike. So since Netflix right now is at 285, that means I owe someone 700 shares at 280. So I'm at a $2,700 loss. In order to avoid that, I'm going to roll it out another 7 days. Rolling just means accepting a loss, closing out my current contracts at a loss, and then selling new ones. Sometimes what I could do if I'm in big trouble, I could have managed this earlier. I could sell more. I could sell like 10 and get really out of the money. I'm not going to try selling more and increasing my buying power because that is high risk. I do think this might be short-lived. So I'll just sell another 7 days and $5 up in strikes. So what I'm doing here, I'm buying to close this 280 at a loss, and I'm selling a new credit spread at what is this? So I'm selling another 7 days out, 285. So it gives me another $5 in leeway. Now, this is like right at the money, right? So right now it's at 284. So 285 means I'm just like 30 cents away from risk, but I am confident that this might max out at 300 and then come back down, but we will see. We'll see how it works out here. So what I'm going to do, buy this back at a loss and sell the new one at a, I don't want to do market. I want like a $2 gain. So 2 times 7 times 100 should be, what is this, $1,400? So I should be making $1,400 US here. So buying to close, selling to open. And then let's see. Buy to close, sell to open. Yeah, so I should be good. I should be good doing this. Hopefully it gets filled right away. I probably could have made a little bit more money. Yeah, I probably could have. So this is my new position. Buying myself a little bit more time. And then what else did I have to do? If I show you AMD, I sold cash secured puts on AMD. Now, the reason why I'm going to close this one out, I have 35 days left, but I already made, 75% of the profit. So within 7 days, 7 out of 42 days, I already made 75%. So why not close it out now and then sell new ones if the stock comes back down? I'm not going to chase it upwards. So if you look at AMD has gone up a lot. I'm not going to chase it up by selling 60 and then 65 because we could come back down. This rally, I don't think it'll last. This could come back down. Nothing is ever straight up. So eventually I'll have to stop selling like my short calls and maybe get closer to the money on the puts because eventually the bear market will be over and we'll start making money again. But I am going to get rid of this right now, give me back some buying power and just take $345 in profit in just a week, which is not bad. So what you do is you just buy back the exact options you sold. And this is buy to close. That's how you know you're doing it properly. And then this should get filled right away and I should be fine. If we just take a look at some of my other positions, oh yeah, I have a lot going on here. I have my Square, of course I sold naked calls on Square and it increases the next day. So just my luck, right? I could sell more Air Canada covered calls. I have been doing pretty well on these. I wonder if I should save for next week or if I should do it now. Is the market closed today? Market data. Okay, so I guess the market is open on Remembrance Day. It's just the banks that are closed. I have a few Tesla trades. Maybe I can show you. So this, is it doing it properly? No, it's not. So I sold 5 put credit spreads on Tesla. I did this, I think, on Wednesday. So I sold 5 because Tesla is extremely volatile. I have 7 days left. If I needed to manage, I'd roll up to 7 or 10 max. Right now, Tesla is at 191. So it's like theta is slowly decaying. There's a lot of gamma on this. I know this is not technically a theta play, which is like the time decay, but hopefully if this gets down to like $1 and if I make, let's say 500-600 profit, maybe I'll close it out and then roll a new one. So I should be good. I'm not too confident right now in selling the credit side, the call side. So if we just look out, like 15% out of the money, what's the math on that? 191 times what? 220. Could I sell 220 and still make money? Probably not. Like, this is not enough. I mean, if I could sell 215, yeah, this is still not enough. I don't know. We'll wait. We'll wait to see if it goes up on Monday. Then maybe I can sell a little bit more of these. We'll see what happens. So what was I going to do? Let's see if we could make some money on Air Canada. So I have 2,000 shares on Air Canada in my margin and my TFSA. I sold at the 20 strike, so I can buy these back for like 4 or 5 cents. And then what I can do, sell December 16th again at the 20 strike. So if I paid $22.50 for it, and if I make 34, let's say $35, so $35 with $22.50 in collateral. So for 1 month, that's 1.5%. It's nothing too crazy, but it's still, another $300 that I wasn't making initially. So I'll set that up now. So what I'm doing here, I'm selling a diagonal, which just means, oh, my zoom is off. Oh, wait, my focus. Sorry. Hope the focus works there. I'm just looking at the viewfinder right now. So what I'm doing is buying back the initial calls I sold, and then I'll sell new ones 30 days out at the same price. Go customize. What should I be aiming for here? Let's say at least $30 a contract. This should be fine. If I go like this, $300 for another 30 days. That should be good. Cool. Buy to close 10 is getting rid of my obligation. Sell to open 10 new ones. Should fill. Is it going to fill? All right. And now for one of my biggest blunders, NVDA. I have NVIDIA calls that are in the money. I could have made another $6,000, and this is painful to see. NVIDIA has earnings. I don't know why. I don't know why I did this. I just wanted to film a video, I guess. I didn't expect NVIDIA to go up. What was it? So 138 to 157 in just a day. When I sold this, I think it was like 129. So I just thought things would keep going down. So I have 2 naked calls and then 2 covered calls, or poor man's covered calls. And then obviously I'm down $26,000. Frustrating, but part of the game. So now I'm just going to roll these out another 30 days just to avoid the chance of early assignment. And then, even if it does get early assigned, I think I'll be fine. I'll just go short on NVIDIA and then see if it goes down. I don't think this rally would last. So I'm just going to sell another 30 days and then see what happens. Again, so what I'm doing here, I'm doing a diagonal call because it's just easy to close it out. Order partially filled. Okay. Hopefully the other 3 get filled. That's fine. So I'm going to buy back these 4 at 145. I can't believe I missed out on $6,000. I'm going to sell. Should I go further? Oh, another five strikes. You know, it does give me a little bit. So 5 strikes times 4 contracts would be another $2,000 potentially if it does get assigned or called away. Does make me feel a little better for not losing the 6,000. I'll make a little 2,000 of it back, plus whatever I make here, $400. I'm just going to do that. $320. That's fine. So it does hurt. Does hurt to see, but it's okay. Not really. I do wish I made that extra $6,000, but it's fine. This is part of the game. It hurts to see. All right, the rest of the Air Canada stuff got filled. I'll probably do the same in my tax-free savings account. I have another 1,000 shares in there for Air Canada. I'll just roll it out another 30 days. And I'll set that up now. Well, sorry if this gets a little repetitive, but I'm just doing the same thing, you know, from like 3 weeks ago to now. And now it's just the same in 2 accounts. I only have 2 options currently in my tax-free savings account. I have Apple, which I sold a covered call on, making majority of the money here. I'll probably sell another one. I've been doing this for like 10 years, I feel. And it's been working out pretty good, making like $100, I guess $130 a month. And this is US, so it's like 170 Canadian, which does help out. What I'm going to do, sell another 10 covered calls on Air Canada, make another $300, $208. And then here we go. This should get partially filled at the beginning because there's not much volume. There's not much movement on Canadian stocks. I try not to do Canadian stocks too often. But yeah, I think I'm going to leave it here. Hopefully I can get this edited and out Saturday or Sunday. I'm trying to make more content and a few more videos. So tune into that. Let me know if you have any questions, and I'll see you in the next one.